Welcome back to Explain the Charts, your go-to channel for in-depth market analysis. Today, July 24th, 2025, all eyes are on Intel Corporation, ticker symbol Intel, as they prepare to report their Q2 earnings. This is a pivotal moment, with Wall Street looking for clear signs of a turnaround amidst ongoing challenges. The latest news paints a cautious picture, with analysts expecting Intel to report its sixth consecutive quarterly loss and fifth consecutive revenue decline. Concerns linger about their contract manufacturing business, particularly a potential pivot from the 18A to 14A process, which could lead to massive write-downs. Despite this, Intel is highlighting significant cost-cutting, including recent job cuts, indicating a focus on future efficiency over short-term numbers. Analyst consensus remains a hold, with an average price target of $22.10, suggesting a potential downside from its current trading price of $23.49. Now, let's turn our attention to the charts to see how this narrative is reflected in INTC's price action. Looking at the daily chart for Intel, we can immediately see a significant downtrend that has been in place since early 2024, where prices were ranging between $43 and $45. The sharp decline in early August 2024, plummeting from around $30 to $21, heavily aligns with the ongoing reports of revenue decline and quarterly losses. Another notable drop occurred in early December 2024, pushing the price from roughly $24 down to the $20 mark. These declines on the daily chart reflect the negative sentiment and financial struggles that have been widely reported. However, a critical development emerged in April 2025, which we must examine more closely. After reaching a low around $18, Intel staged a powerful rebound, signaling strong buying interest at these depressed levels. Let's zoom in on the daily chart from April to July 2025 to observe this significant reversal. Specifically, look at the candle on April 9, 2025, which opened at $18.07 and closed at $21.53, marking an impressive 19.15% gain on very high volume of over 223 million shares. This strong bullish engulfing candle represents a potential turning point, suggesting that the market might be starting to price in Intel's long-term turnaround plans and cost-cutting initiatives, despite the bleak short-term financial outlook. Following this, the stock has generally trended upwards, recovering from the multi-year lows and pushing back towards previous support zones, currently sitting at $23.49 as of yesterday's close. This indicates a fight between long-term value investors and short-term traders reacting to the fundamental challenges. Shifting to the 1-hour chart, specifically from July 7th to July 15th, 2025, we can observe the more immediate price action. We saw a sharp surge from approximately $22 up to $23.80 in the first few days of July, indicating a strong short-term upward momentum. Following this initial push, the price entered a consolidation phase, trading mainly within the $23.20 to $23.60 range. This tight range on the hourly chart suggests that buyers and sellers are currently in a delicate balance, awaiting fresh catalysts. Volume during this consolidation has been moderate, but any significant breakouts from this range could indicate the next directional move. Now, let's zoom in further to the 15-minute chart, covering July 21st to July 23rd, to understand the intraday dynamics leading up to earnings. On July 21st, we witnessed a notable jump from around $23.30 to $23.71 around 13:18 Universal Time Coordinated, followed by a swift pullback, demonstrating significant intraday volatility. A similar pattern unfolded on July 22nd, with the price jumping from roughly $23.30 to $23.46, followed by a period of consolidation. Most recently, on July 23rd, the price experienced a sharp drop from $23.37 to $22.99 around 13:33 Universal Time Coordinated, but quickly rebounded to close at $23.49. This rebound on high volume confirms that despite selling pressure, there's underlying demand to buy dips, especially as earnings approach. These rapid price swings on the 15-minute chart highlight the intense anticipation and uncertainty surrounding Intel's Q2 report. Let's identify key price levels for Intel to watch, starting with support. Immediate support can be found around the $22.90 to $23 range, as seen in the recent intraday rebounds. A more significant support level, aligned with analyst targets and previous price action, is around $22. Below that, the strong historical support established during the April 2025 lows sits firmly in the $18 to $19 range. On the resistance side, the current trading area of $23.50 to $23.60 presents immediate resistance. Beyond that, key resistance levels are at $24, then the $25 to $26 zone, which acted as significant hurdles in late 2024 and early 2025. The highest resistance is around the $27 to $28 peak seen in February 2025. So, what does this mean for traders and investors, and should you be bullish or bearish on Intel? For a bearish outlook, the persistent trend of quarterly losses and revenue declines, coupled with analyst price targets implying downside, supports a cautious stance. Furthermore, any negative news regarding the 18A to 14A pivot or disappointing forward guidance could easily send the stock below the $22 support level, potentially towards the $19 zone. Conversely, a bullish case can be made by looking past the short-term financials and focusing on Intel's aggressive cost-cutting and long-term vision in AI and chip manufacturing. The significant rebound from the April 2025 lows demonstrates strong underlying buying interest at those levels, suggesting that some investors believe the worst may be priced in. A sustained breakout above $24, especially on strong volume, could signal a bullish short-term reversal, with targets potentially reaching $25 or even $26. Recapping important levels, keep a close eye on $22 as crucial support and $25 as a key resistance point. An unbiased prediction is that post-earnings, Intel will likely remain highly volatile. There's a moderate likelihood it could hold above $22 if the earnings narrative focuses on future growth and successful cost-cutting, even if immediate numbers are soft. However, there's a moderate to higher likelihood of a drop below $22 if the earnings report or guidance is worse than anticipated, confirming analyst fears. To reinforce a bullish scenario, look for an earnings beat or, more importantly, a strong future outlook, particularly regarding their foundry business and AI initiatives, leading to a sustained break above $25. For a bearish scenario, watch for confirmation of significant write-downs, weaker than expected guidance, or a breakdown below $22 on high selling volume. Always remember to monitor the earnings call for specific details and watch how volume reacts to price movements for further clues. Thank you for watching Explain the Charts, and we'll see you in the next analysis.